Gents, let's move on to your stock picks. Wayne, what are you picking today?
Look, I'm going with Amplats. I know I've been wrong on this one, and I do apologize for that. But it's been sitting here. I mean, it went down enormously on the back of Anglo American doing a private placing at 515. It's recovered quite a bit since then. And it's the same old story: lower interest rates, better global growth, hopefully some increase in commodity prices, and then specifically for platinum, this battery electric vehicles seem to be falling very flat at the moment. So, I mean, that big threat, and obviously electric vehicle is coming, but it might not be battery electric that will win the race. So in the shorter to medium term, battery doesn't seem as much of a threat to the PGMs as what was made out to be a year or two ago. And when you talk to the PGM management, they actually say they see no fall off in demand from the autocat manufacturers, no fall off. So hopefully we get some joy in this share. Remember, this share's down from 2,400 to 500, now back up close to 600. So that's what I'll go for. It is risky, but if you get this cycle right, there can be enormous payoffs for you.
All right. Gary, on your side?
I've also got a bit of a controversial pick today, so I think I might get a bit of a lashback on this one. But I'm going to go with Boeing. Obviously, they've had the 737 MAX issues. They left astronauts on the International Space Station with their Starliner, and now they have a machinist strike that looks like it'll go on for a couple of months as well. So you couldn't really ask for more bad news around a company than Boeing currently has. That said, we've got a fair value on the stock, around $220 per share. The stock's currently trading kind of mid 150s. So it seems very cheap. It seems like a lot of the bad news is already in the price. This is a duopoly between Boeing and Airbus. They have a massive moat. It is very difficult to see how, essentially aircraft production and commercial airframe manufacturing really can adopt a third participant. It's probably not going to happen. If I look out over the next couple of years, yes, we are expecting this year earnings are going to be under immense pressure, but 1 year out you are expecting a big recovery in earnings from Boeing as well. And obviously a new management team in place as well. We will obviously monitor it closely because they're going just to see how they deal with the strike. I think it's going to be a great test for the new management team, but hopefully most of the bad news is now in the press. Most of it is in the price, and Boeing can start to surprise on the upside. And it is specifically focused on emerging markets, just with their narrow body frame aircraft as well. They should do well in a falling interest rate environment. Their balance sheet is a little bit stretched after COVID, but again, something that will benefit from lower interest rates. So I think the right type of environment to buy in, and I don't want to say picking the bottom because that's also a very dangerous phrase in markets. But I do think that there's real value in Boeing that could be unlocked over the next 5 years.
All right. Well, thank you so much for your time and for your insights, gents. Much appreciated. That is all for tonight's Stock Watch. Thanks to our guests, Gary Booysen from Rand Swiss and Wayne McCurrie from FNB Wealth and Investments. Up next, The Close. Stay tuned.